Welcome everyone. My name is Anna. I'm a growth analyst at Radarblock. I hope you learn a lot. Right now we're going to present our first panel. So we went from institutions are coming to institutions are buying. So the question right now is how can we get these institutions interested in your product? To help us with that, we have our guests that I invite to come in as I call. Okay, so we have Hamza from 3 Poch Labs. Please, some claps, people, some claps. Thank you. Okay, then we have Jack, he's a biz dev from Messari. Don't be shy, don't be shy. Then we have Stefano, director for Alea Research. Thank you. And to moderate this panel, we'll have our strategy and growth advisor for Radarblock, Abdullah.
So, good morning, everyone. Welcome to our panel on what excites institutional capital in Web3. I am Abdullah. It's a pleasure to moderate this discussion with our esteemed panelists, Stefano from Alea Research, Jack from Messari, and Hamza from 3 Poch Labs. Today, we'll deep dive into the sectors capturing institutional interest, the metrics guiding investment decisions, and the interplay between AI and Web3. We will also explore the balance between infra and consumer-facing applications and what makes a project stand out to institutional capital investors such as PE firms, hedge funds, family offices, and sovereign wealth funds. So everyone, without any delay, let's begin by understanding the current market dynamics and what our panelists find most compelling in this evolving space. So my first question is, over the past 24 months, the Web3 landscape has experienced significant shifts from Ethereum's taking dominance in 2023 to the rise of Bitcoin ETFs and meme coins in 2024. As right now, we navigate into 2025, which is characterized by macroeconomic uncertainties and regulatory developments such as the whole tariff scenario in the US right now. What do you guys think? What are the key trends which are shaping institutional interest in the Web3 space? We can start from Hamza, then go to Jack, and then Stefano.
Yeah, thank you. Glad to be here, and it's a great conference set up by Radarblock firstly, so big round of applause for them. On the institutional side, I think apart from the current 2 weeks ago of what tariff happened, Bitcoin is kind of becoming more and more of a gold-like asset. Of course, that's in the short-term time frame of 2 weeks that Bitcoin has shown significant outperformance versus SPX or other stock indexes or even gold. So that you could say that, but it's too early to say. But I think on the broader trend of of crypto landscape, I think cash generating projects are going to be important if we are in this phase of sort of bear consolidation or chop market. So I believe of course Bitcoin ETF or Bitcoin stuff and cash flow projects.
For sure. Jack, what are your thoughts?
Yeah, over the last 24 months, you kind of seen a shift in the whole crypto industry. Up to that point, we were building without any regulation, any clarity, this massive gray area. And even though it's still some uncertainty today, I think there's a lot more friendly environments all around the globe. So sectors to focus on that institutions are coming in and caring about, like payments, stable coins, real world assets, are really in the spotlight with some room to innovate around, DeFi and AI coming into play. So a lot of exciting things happening, but I think the outlook of regulatory clarity down the road has really perked up institutions, at least in the last 12 months, last 6 months for sure.
For sure. Stefano, what are your thoughts?
Yeah, I can definitely echo that. So basically anything that's touching institutions, right, that's going to be a major trend. Not just BTC, but also payments. Last week I was at Money 2020, which is a payments conference. And it's sort of already a fact that a lot of these fintech companies are fully embracing stable coins and crypto rails, and it's already here. And we're going to see more and more of that.
Perfect. So this being said, let's deep dive into the market dynamics and the investment signals right now in the whole industry. So this moves on to our second question. So given the evolving market condition, what specific sectors or project types are currently attracting institutional capital? Are there particular areas where you guys think we are seeing increased due diligence or investment activity? Let's start with Hamza and then we'll go in the same order.
Hello. Okay. Yeah, as I said, I think in this sort of bear consolidation stage of market, and plus, like even the stock markets are like totally crushed for the first time in the last 100 years. The most I think it's working now.
Happens.
Oh, so yeah, like I was saying, the stock markets are down bad. Crypto is down badder. So what whoever is left in crypto is either like completely stupid, cannot get a job like us outside, and that's a fact. So you have to accept that, and the resilience that some projects will show at this point, whether it is some DeFi projects, like I don't want to name any particular ones that we either invest or hold or whatever, but you can see in DeFi there are like 3-4 projects. In L1s there are like 2-3 max that you could straight invest with a straight face, and I think those projects, once the liquidity comes in with M2 rise and Fed rates cutting and all those things, which will eventually happen in the next 12 months, I think these big ones are just going to grow, and then of course we'll see other catch-ups in the later stages of the market.
Perfect.
Yeah, I think the way market's trending right now, you asked about the focus on different kind of projects this time around, and apps and revenue are just two absolute buzzwords that come to mind when you say that, because the diligence teams are doing is not so much on tokenomics or theoretical value or TVL even. It's much more about product market fit, usage, making a product that people actually want to use in crypto, outside of crypto, and the potential for the TAM that they can capture there. So I think it might be a little more investable today. At the bottom of the trough, let's be a little greedy while others are fearful, but definitely want to pick your spots and pick leaders and winners, like Hamza said, throughout the next 12 months.
Yeah, I think this is definitely like a part of the maturation that we're going through, right? Like it all used to be like pie in the sky type metrics, and now we're actually moving to more like substantive metrics, right? Which is, I think, great to see. You also mentioned like, leaders who will be capturing this value, so to speak. DeFi, RWA are like you asked about the areas, are definitely like the top obvious contenders for this. I think an interesting one to look at as well are like deepen projects that sort of like provide like the infra or the underlying basis for this. So GPU compute, for example, and privacy related projects, which especially like the institutions, I mean, everyone is concerned and interested in privacy, but I think for institutions specifically, it's crucial.
So just a follow-up question to Jack. You briefly touched upon some parameters, so I want to understand from you, from Messari's vantage point right now, how have these metrics evolved, and what are the new data points which are gaining prominence within the firm?
Yeah, like I said, revenue before is number one. It's up there. I think other ones to consider, you mentioned DeepEnd, which just perked me right up, is that real world demand. It's no longer about just seeding the market with free hardware or incentivized hardware or incentivized token usage to get TVL into your pools, into your project and things like that. So product market fit, I think, we're seeing a lot of different metrics actually get created or evolved around these new projects, REV, different than revenue, and things like that. Block space used to be kind of the market we operated in. That market is so flooded, we only use like 1-2% of block space that there is right now. So I think that app focus is creating a lot of new metrics for us to look at closely.
Perfect. So this makes us move to our second topic, which is a deep dive into infra versus application. So here's my third question, and it goes like this. The debate between investing in infra versus consumer-facing application continues, even till date. How do you assess the risk-reward profile of these two categories? And has your investment thesis shifted in recent times?
So for us, like, we're liquid. We don't do private investments. So for us, it's a very different game. But I understand why people go towards investing more into infra, because when you present it to your LPs, you can do it with a straight face, like relatively straight face, than doing it in an app which does not make sense at 20, 30, 40 mil FDV. But you can pitch an infra as the next Internet Explorer or the next Mozilla or the next Firefox or whatever, however you want to put that, or the next Google Fiber, however you want to pitch that. But from a liquid point of view, I think we already have enough block space, like Jack said, and with the advent of like more application-specific infra, like Hyperliquid, or where you already have the greatest, okay, not greatest, but like at least the most cash-generating app in all of crypto, baked into an L1. So and there is no other L1, okay, outside of Solana or Ethereum or BTC that has a clear PMF, at least in my opinion. I may be wrong. So then why do you want to invest in the nth L1 from a liquid point of view? From VC, I understand. So like from us, from a liquid point of view, we're just like focused on what people are using at this point. There are a bunch of good stuff in DeFi. There's a bunch of good stuff in the L1 side. So yeah, for us, infra does not make sense unless it is ridiculously cheap.
Perfect. Jack, what are your thoughts?
Yeah, I think Hamza made a lot of great points on just the consumer crypto, the liquid consumer crypto they're focusing on, to kind of like shape what consumer crypto is. I think last cycle it was, let's replace Shopify and let's, do these different marketplaces. But now with projects rolling out in DePIN and DeFi, like we're attacking people's savings accounts in the real world. Let's bring that on chain. We're attacking their broadband connection, their Wi-Fi hotspots, all these different kind of applications that really can be, this broader sector is consumer crypto, I think, this time around. And there's a lot more opportunity. Teams are being more responsible, where they evaluate their tokens, the way they release their tokens. Just from the research standpoint, with the way we work with teams, there's been so much learning since the last cycle on how to launch a token and how to develop a community. So to the liquid point of view, I think that's a really good point.
Yeah, to add there, I think from an investment standpoint, infrastructure is always a bit more of a safe bet, if you will. You are taking a very wide bet instead of a concentrated bet, right? So anything happening in an ecosystem, you could capture the value from. So that's one reason why we see that particular dynamic. Then another thing to add on there, I think it's interesting that, with these institutions coming in, again, they are definitely driving this need for infra as well. So private blockchains, institutional blockchains. So that's why we see some of the dynamics that are currently going on.
All right. So Hamza, as you mentioned, from a liquid fund perspective, things are a bit different. I want you to expand on it, and if you can tell us, how do you approach investments in projects that prioritized decentralization and community-driven growth over institutional partnership?
It is working. Okay. Sorry. Could you repeat the question?
So, as you rightly mentioned, from a liquid fund perspective, you approach things in a different way. So, how do you approach investments in projects that prioritize decentralization and community-driven growth over institutional partnership?
Yeah, I think we do not look. It may be wrong to say, but we do not pay any attention to this institutional partnership thing. I think it's biased, but you can. A lot of people can just buy those things, so it doesn't make sense. What matters is what happens on chain. As your validator said, decentralized. Is your TVL actually TVL and not temporary value locked? And those kind of things which you can, even with a little wider than normal distribution IQ, you can look into it and just point certain things out. Like if a new chain launches and it has 200 million TV around day one, like, you know that is fake. Or spoofed or whatever you want to call that. So like we don't look at this institutional thing very closely because it does not make sense on the most part of it. Yeah. What matters is most about like the decentralization of, like I said, validators and all those things.
But do you foresee that changing in the coming months or years, because now we have Goldman, Blackstone, and all these big funds coming in?
I hope so.
Okay. So now we are moving to the third topic, which is the intersection of AI and Web3. Here I just have one question, and it goes like this: that the integration of AI into Web3 has been a hot topic of discussion. From your standpoint, are there tangible investment opportunities at this intersection right now in the market, or is it more speculative at this stage?
Oh, I think there are a few good things now. Earlier, we traded a lot of those vaporware projects, but we were internally very clear that 99% is vapor. So you just trade to increase your PNL or whatever. But yeah, most of them are vapor, and now after 2 months to 3 months, you can see that all of them are like 99% or even more down. However, not all of them are vapor. I think some of the infra projects and some of the, like you said, the GPU ones are pretty decent. However, the market has kind of changed that the GPU ones you don't really need, because there's already a flood of NVIDIA GPUs, and like the prices have also come down. However, with the tariffs, that might change, who knows. So I think the agent space is pretty interesting, and then decentralized, like the Nows one which happened recently on Solana was pretty cool. So yeah, we are watching the space overall very closely, the AI Web3 space, because it's like the intersection of two of the biggest things ever. So
Yeah, AI came out hot just into crypto, and it makes sense, the marriage between AI and crypto and blockchain. The agentic economy, I think that's where it works in blockchain and crypto. As to institutional investment, I think, to pump our own research book a little bit, I think they need a little more transparency into what's going on. These coins and these projects came out hot, and like Hamza said, they're 99% gone or down or have to reset. So there are teams doing AI responsibly in crypto, and that's the ones we're trying to support, that institutions should try to look to learn more about. In terms of liquid investability right now, I don't know as much, but it seems a little depressed, the market there for AI. So I'd definitely like to see it come back, and everything in crypto has a way of coming back. So it'll stick around for sure, and I'm excited to see the next chapter of it.
Yeah, definitely what Hamza and Jack said, for sure. The only thing I'll add there, I suppose, is that it's been a big hype, and it's very overbought at the moment. So yeah, there are of course some tangible investment opportunities still, but at this moment we're definitely like gonna see a bubble.
All right. So Jack, to Stefano, based on Alea Research analysis right now, do you want to name any specific AI Web3 projects that demonstrate promising fundamentals and real-world applications?
Yeah, so like I don't want to point out any projects in particular, but I can talk a bit more general about like what we're covering. And one thing that stands out there is, I think one project that's interesting is in this specific sector, right, is something like WorldCoin, which is about, they have a little bit like a different architecture. So it's a hand palm reading, and the point there, I think, is that what's also interesting to look at is not just crypto AI projects directly, but things that stand to benefit from a world where AI is going to be like so dominant, like such a dominant force and part of our lives, right? So the question that comes up there is then, okay, how can you distinguish like what's real from what's like AI generated or agent generated, whatever you want to call it. And some of these projects are like tackling that, and I think those projects tend to capture a lot of value as well.
Perfect. Thank you for such an elaborate answer. So now we move towards the end of our panel, and here we would like to have a rapid fire round. So how it will go is that I will ask one question, and then you guys can answer quickly one by one. All right. So my first question is, what is the most overrated narrative in Web3 today? It's a rapid fire.
Correlated, you said?
Overrated.
Overrated. AI.
I'm gonna say tokenization in general, not, but the tokenization of just about everything. Yeah, that's so tired.
Okay. All right, moving to the second question. Most underrated trait in a Web3 founder. Most underrated trait in a Web3 founder. Ability to bootstrap? Okay. What about you?
Has energy in general. We're talking about the value of marketing. That's what that requires. Because you're building, leading, and then you got to be connected to everybody.
Yeah, for sure. Speed, right? Go fast and break things. Seeing one's own limitations. As a founder, seeing one's own limitations, because that's what allows you to build a team, delegate, get the right partners, etc., etc.
My last question is, one piece of advice for projects seeking institutional investment, or for you, Hamza, any kind of investment right now?
Don't raise too high. A lot of people are still stuck in this mindset of like 2 weeks, 2 to 3 months back, oh, we can raise at no product at a very high val. I think that's stupid and you're wasting time.
Have great documentation, invest in research, invest in educating your community and engaging with them.
Yeah, to tack on that, I would say, I'm blanking. What was the question again?
One piece of advice for projects seeking institutional investment.
Right, okay, yeah. I mean, absolutely, like, building relationships and learning to talk their language. What do they value? How do they think? Like, create that relationship and like, understand them.
All right, so with this we come to the end of our panel discussion. Thank you very much, Hamza, Jack, and Stefano, for giving your time, and thank you everyone for listening in.